What's up guys, welcome to Oz Wealth and welcome to another video. Oh boy, what an interesting week we had this past week. What a quick recovery of a wild week. We ended the week on a positive green numbers. As you see here, the Dow on Friday closed at 0.86% in green, the S&P 500 gain of 0.10%, and the Nasdaq which is the heavy in tech, ended Friday on a loss of 0.5%, and the Russell ended Friday on the gain of 0.5%. When it comes to the sectors, industrials was taking the lead on Friday at 1.32%, followed by utilities, real estate, financial, consumer staples, healthcare materials, consumer discretionary. We're talking about Tesla, energy, and information technology. As you see, the Nasdaq and information technology kind of, the connection here is at almost the bottom of the list, and the communication services, the AT&T and the Verizon, they're still struggling to find their way up. As for my Robinhood portfolio, on Friday we ended the day with a gain of 0.25%, as you see here. For the week, we had such an interesting week. We started with a slow slide to the downward, but then the entire market, with the news about the stimulus check, just took off, and since then it was a very nice rally, and we ended the week on at $68,550 with a gain of 5.51%. As for the month, we're still in the recovery mode. We haven't recovered fully, but as for the month, we're down 1.58%. For the 3 months, we're up 8.23%. For the year, we are up almost 30%, and for overall, we are up 28, almost 29%. As for my Robinhood portfolio holdings, as you see here, Tesla, we were able to grab 5 shares last week, getting our total shares of Tesla to 25. Tesla ended Friday on the negative of a loss of 1%. Apple, also we were able to grab 10 more shares of Apple, rounding the numbers that we totally own here in Oz Wealth at $110. I've never ever imagined being able to hold 110 shares of Apple. I mean, having above 100 shares of Apple was like dream come true. I mean, I still look at it every day, and I can't believe my eyes. I was able to reach this benchmark. It's just incredible. And again, Apple and Tesla, as you see here, is almost 50% of my portfolio. From now on, we're going to be focusing on concentrating our effort on loading the blue dividend boring aristocrat stocks from Coca-Cola to AT&T to Realty Income, and we're going to go through that in a minute. Apple ended Friday on a loss of almost 0.75%, with still around $121, and I think Apple is still a good buy so far. With a stimulus check being finalized and sent to American people, the stock market was receiving this news in a very positive move. As you see here, the tech stocks are still kind of hesitant to take off, from Apple to Tesla to in the entire Nasdaq in general. As you see previously, as I was talking about the sectors, is still hesitant to take off. So hopefully that will be a great opportunity to get more shares of those beautiful stocks that are going to increase in value for sure in the future. As you see here, Intel ended the Friday on the loss of 0.75% at $62. ARK, I think it's an incredible opportunity to load up on ARK at $126. I think next week, or when the market opens on Monday, if ARK's still under $130, I think it's still a good buy, and it's on the top of our watch list. SPHD ended Friday with a gain of 1.33%. AT&T, we own 200 shares at 1.5% of a gain. Realty Income, we ended Friday at 1.59%. LTC, 2.5% of gain. Stag, I think this one is now rising to the top of our waiting list, and I think we should get this total number to 100 with all the positive news we hear about Stag in general and the warehouses, Amazons and other retailers. I think Stag in the future has a great potentiality to go beyond 33%. So, and it's a monthly dividend stock as well. So we're going to keep our eyes on Stag. AGNC ended Friday with a gain of 1.3%. Main Street Capital, we own 50 shares with a gain. Also, the financial sector in general was like doing really well. Johnson & Johnson, 5 shares, very shy gain at almost 0.25% at around $160. Bank of America gained 2%. We own 30 shares. American Express gained almost 0.5% at $148. Caterpillar is continuing the rally at almost 4.5% at almost $30. Coca-Cola, after adding the 30 shares of Coca-Cola with the expectation to get a dividend payment around April 1st, around $12, scored a loss of almost 1/3% at $50.32. Philip Morris ended Friday at 1.26% of a gain. ExxonMobil continued rallying up at 1.44% at $62.19. Pembina also following the entire energy sectors with a gain of almost 0.5% at $30.68. Con Edison, the utility sectors in general, was doing really well last week, ended Friday at 1.60%. Hormel Food also did a good job at $48.12 with a gain of almost 0.75%. For my overall investing portfolio here, the main dashboard, last time we recorded the video here on YouTube, we were at $81,500. Today we are at $88,147, nearing the $90,000 threshold. It's almost a gain of $6,000 or $7,000 in 1 week, which is incredible. I think we're going to be celebrating when we get $100,000 overall in the stock markets. And what I'm talking about, $100,000 in the stock market, this is a sum up of 3 different portfolio. As you see here, I'm using simplysafedividend website to track all investments I have in all brokerage account, whether they are HSA or Robinhood account or my Roth IRA. And as you see here, the HSA right now is at $3,830. Robinhood $68,000. Roth IRA was also doing well this week with $15,000, almost $16,000, and with the annual income from dividend about $2,200. And as soon as we get this to $2,400, which means we're going to be receiving almost $200 every month from dividend from all the investment we're doing, it's going to be like huge milestone of achievement. So hopefully we can get that by next month, as soon as we start to turn the direction toward coming back to invest in the blue dividend boring stocks like Pfizer, like Coca-Cola, like Cisco, like Oracle. Those companies they were really attractive in their value. As we see, Oracle really dropped in value tremendously, and Pfizer still not recovering. Those are such an enticing stocks. So hopefully by loading up on those stocks, we're going to get this to 2,400 by the end of next month. As for the income from dividend, we're expecting for the rest of this month and the beginning of next month, we are going to be receiving a bunch load of dividends from various stocks. And as you see here, on March 15, we're going to be receiving $57.43 from 3 different stocks: Con Edison, Main Street Capital, and Realty Income. Bank of America is going to send us $5.40, and then on the 31st, LTC is going to send us $5.70. SPHD also on the same day is going to send us about $17, and then on April 1st, Coca-Cola is going to send us $12.60. Philip Morris on May the 9th going to send us $7.20, and AGNC $6.36 on the 12th of April, and then on April 15, Main Street Capital and Pembina and Stag is going to send us $24.58. As for the valuation of our entire portfolio, as you see here, we're at 2.5%, and the total dividend growth is 4% year after year as for the current portfolio. As you see here with all the stocks that we own, it's like our own ETF. We are covering all kind of sectors, and we are pretty heavy on tech, as Apple and Tesla now is almost 50% of our portfolio here at Oswell. But we're trying to balance things out very soon. We're just trying to take advantage of the current market and try to get advantage of the low value and the discounted value of those high-tech stocks. But as soon as everything smoothed out, we're going to go back to the original strategy, which is the blue chip dividend stocks, as I mentioned earlier. When it comes to the diversification of our portfolio here at Oswell, consumer discretionary is finally taking the lead, as it was a kind of battle between consumer discretionary and the information technology. If you look at the previous videos, they were almost 25% each. Now, with the rise of Tesla and the gain Tesla scored last week, almost around $700, back to the mark of $700, we see Tesla in my portfolio is almost 28%, followed by information technology, which is Apple, 24%, real estate is at 15%, consumer communication with the AT&T is the biggest holding, 10%, financial, Bank of America, Main Street Capital, and American Express, 8%, energy, Pembina, and ExxonMobil is 8%, consumer staples, the Coca-Cola, with the 30%, with the 30 shares that we bought last week, boost the consumer staples sector in my portfolio to 5%, and the utilities and the healthcare and the industrials are still the very minimal, the smallest holdings in my portfolio. I'm not a big fan of utilities. I bought Con Edison just to have a low exposure to utility sectors, as it's known as a recession-proof sector. Healthcare is going to up for sure in the next coming days, as we're having Pfizer on the top of the waiting list, as also Pfizer still in a very good value, very enticing, and it's kind of discounted value. And the industrials with the Caterpillar, which is so overly valued, we're not sure if we're going to increase anything on the industrials. As for the income we receive here in Oswell, AT&T is still the top of the stocks that send us dividends. We receive 18%, 19% of our income from dividends from AT&T, followed by realty income, which is a REIT stocks, monthly dividend stocks, 12.8%. SPHD, the ETF, the famous ETF between the YouTubers here on YouTube, send us 8.7% of the dividends we receive. ExxonMobil, 8.7%. I would never pay attention. Those numbers are the same. Schwab, S&P 500, the index funds in my Roth IRA send us 6%. Main Street Capital, 5.6%. Pembina, the energy stocks, 4.5%. So Pembina and ExxonMobil almost send us 12%, as the energy sector and the rise of the energy sectors almost send us in dividends almost at 12% if you compare it to realty income. So the energy sector, I've never paid attention to this before. Apple is the only tech stocks that I own that send us dividends, participates in 4.1% in the overall dividends we receive here. AGNC 3.5% and Stag 3.3%. Quick reminder about the purpose of this channel. I started this channel initially to document my journey to financial freedom. At the very beginning, I was part of FIRE movement, which is financial independent and retire early. And as any of those YouTubers who are documenting their journey, the ultimate goal is to get our freedom back so we can work for nobody and work only for ourselves. I think this is a very noble cause. So far, we're a year and a half in this journey. I would love to come back to this video one day in the future and see how far I've got. And with your help, I would really appreciate your support. And that's it, guys, for this week. If you have not signed up to Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys take care.